Welcome to Markets Now. I'm Michelle Rook with Ted Seifried, Zaner Ag Hedge, and we did see higher closes in both grain and livestock futures trade here to start the week. And Ted, let's talk about what kind of drove the grain rally today. And some of it was the lower dollar. It hasn't broke here in several days, but we've got some geopolitical concerns, don't we?
Yeah, absolutely. And we'll start with wheat because with wheat we had the bounce off of really contract lows starting on Friday. It was a feeble bounce, but we had gotten very, very oversold, and wheat was due for some sort of corrective action. That started on Friday, and then over the weekend we hear that the U.S. is giving the green light to the Ukraine to use U.S. provided ballistic missiles on attacks within Russia. And the response from Russia was not very friendly about that. Some very stern language. So this is bringing back some renewed concerns about the conflict between Russia and Ukraine, which that makes us worried about crude oil. It makes us worried about wheat, corn to some extent. Conflict always usually brings investment into things like gold, stores of value or flight to safety. So you had a lot of aspects there on Monday that were sort of look like risk on, but I'm going to say conflict on. And again, due to those geopolitical concerns that kind of came up over the weekend. And it's interesting, Michelle, because it comes at a time where I think we had been getting a lot more comfortable about the conflict with Russia and Ukraine, and that it could be coming to an end soon with President-elect Trump coming into office in January. I think the general idea is that this could be winding down. But then we were reminded over the weekend that, okay, but there's still 2 months or so before that happens. Sure. And this could get worse before it gets better. And so that conflict premium in specific commodities that have to do with Russia, Ukraine, that premium came back in on Monday. So we'll see if that lasts. But it was a really nice boost to the markets there.
Yeah, no doubt. And you did close December corn back above $4.25, Jan beans back above $10, and like you said, wheat was off contract lows. But can we keep going here, especially with some new news about China and Brazil and a trade agreement?
Yeah, and that was I saw that come out on Reuters right as we were closing. So I don't think that was something that was traded in the grains markets today. It might take effect on Monday. It might take effect through the night session. We'll see. And to some extent, we knew this. Some of us knew this was going to be a possibility. We knew that President Xi was going to Brazil, I think, for 10 days. And it really has the feeling of a high-level version of what we used to have here or have had here. We have actually had one of the visits since COVID. But when we had the Chinese delegation visit us in Des Moines, and we get these ceremonial signings of big purchase numbers, 10 million metric tons, things like that. This feels like a higher level version of that. And I really wouldn't be surprised when we see the announcement that is due to come out on Wednesday, if there is some very big purchase agreements that happen between China and Brazil. I think they'll be bigger than just run-of-the-mill 10, 15 million metric tons. I think this is a political statement that they're trying to make, both countries. And I think I think corn will be involved as well. So I don't know. I'm a little worried about what that might be on Wednesday. Obviously, we know that Brazil and China are longtime partners for the soybean trade and new business partners on the corn trade. And we know that China has been wanting to prefer Brazil as much as they can. So just how much they prefer or how much they're able to do that, I think we might hear more about that on Wednesday. And again, that might not be something that's very friendly for the markets.
No, and the markets have already been kind of concerned about increased tariffs and a possible trade war. And we have been trading that, haven't we?
Yeah, we have been talking about that. Keep in mind the original tariffs that we put on China never came off. In fact, they were added to a bit during the Biden administration. But it does sound like Trump wants to get back and sort of pick off where he left off. And the concern is there what happens, as far as retaliation from China. And this might be a preemptive thing for them. So this is it's a story that has been in the market as far as, hey, we got to watch out for our relationship with China and our trade relationship with China in particular. But this is going to add fuel to that fire, I believe, Michelle.
You bet. So we have had some demand that's come in at the market. Flash sales, even this morning, of soybeans, meal, and oil. We've had flash sales of corn. But is the business that we've seen to date enough to help get us above some of these resistance levels? Because we are still pretty range bound in the grains, aren't we?
Yeah, for the most part. I mean, corn's been actually in a nice little uptrend here since the end of August. And I think if you look at corn overall, first of all, the funds have now gone long for the first time in a while. And
Right.
really over the past couple of years, they've not spent very much time on the long side of the leisure. So that's nice to see. You know, the corn fundamentals, I think, have been getting more and more friendly, basically with every report or every other report. Certainly haven't gotten worse on most of the reports that we've seen, right? When you talk about overall, ending stocks. I mean, go back to the Outlook Forum numbers that we saw back in February. That was the largest carryover that we saw estimated for this now current corn crop, and they've been kind of shrinking ever since, to the point that we're down below a 2 billion bushel carryover
No
at this
doubt.
point. So I think with that fundamental picture getting a little bit better, I think the funds are more interested in corn. I think they've heard people like me say, hey, I think corn needs more acreage next year, because if we do end up with like a 177 national average yield, that's not going to cut it for the amount of demand we're seeing. So yeah, the corn store is getting a little bit more positive. That doesn't mean that we're immune to a bit of a downdraft if we resume trade wars and let's say soybeans are sharply lower. So I can't say we're out of the woods yet. But we've been drifting higher. Beans have been really kind of sideways. It looked like we wanted to break out to the downside at the end of the week, or at last Thursday, but then we kind of saved it with the UCO announcement with China abandoning their 13% rebates, export rebates. So yeah, I don't know. It's this is a time of the year where we're trying to find direction, and you've got some pretty flighty markets because of it, and some different looking charts, especially when you compare, say, wheat to corn, or even soybeans to corn.
Yeah, what are you watching there right now, as far as technical action?
Yeah. So for December corn, we have this bigger, broader double top action that we have at about 435. If we can get a close solidly above that, I do think that you will see an upside extension back to the 475, 480 territory, and that could happen before the end of the contract life of the December corn. We're running low on time frame for that, so you might have to look out to March for that. But either way, there is a very defined sort of level of resistance at 435 in December corn. That, again, if we have a solid close above that, I think the technical picture really starts to get quite a bit brighter. On the other hand, if we can't do that and break the 410 level to the downside, then it starts to look like we are going to roll over and go test those lows from late August. As far as soybeans are concerned, we've been really bouncing back and forth between the 980 and 1020 level. If we continue to hold that 980 level, then soybeans could follow along with corn, although I don't feel like soybeans are in a position where they need to buy a whole lot of acres. I think that's more of a corn task. But if corn is finding some strength into the end of the calendar year, I do think soybeans would follow. And then lastly, wheat. Wheat is the one that really needs to try to break itself out of this downward breakout that it's been in. Yes, the last 2 days have been a bit more positive. We closed higher Friday and Monday. But I mean, we really have not a great looking chart in wheat right now. I think we need to close above 570 before we can feel like, hey, the lows might be in.
Yeah, that chart, like you said, got really beat up. So cattle chart, let's talk about that one. We did have a higher close today in live and feeder cattle futures. The funds are loaded up long. Are they going to continue to defend their longs? Do they have the technical picture they need to do that?
What's interesting, Michelle, is, we like to use the saying that the feeders are the leaders. And wow, we had a whole lot of strength in feeder cattle on Friday, and then that followed up on Monday. But going back to Friday, I mean, December live cattle just couldn't hold on to the strength. You had to be really disappointed at the end of the day for the December live cattle. But then Monday, the live cattle did start to follow along. Now, I don't think it's enough. I think that either the December cattle need to play catch up, or the feeders are now just getting overbought. After a $7 rally in basically two trade days. So I don't know. Like I said, I would really like to see that live cattle follow along a little bit more than it has as of yet. And maybe it's reluctant because of cattle on feed. That could be it. The funds have trimmed their position a little bit. Are they going to want to get back in before a report or not? Honestly, I don't know if they really pay attention to stuff like that. I think what they're looking at overall is health of the economy and consumer confidence. And it does seem to me like that's getting stronger once again, or have been up until this weekend. Now we'll see what happens with Russia, Ukraine, U.S. conflicts going forward. But if we are willing to let ourselves believe that we're going to be spending as much or just as much or more through this holiday season at the butcher's counter, then I would say that there is some upside potential there for cattle. And the feeders might be the canary in the coal mine, kind of showing us that before the live cattle make their bigger move. And again, it was a bit more positive close on Monday, where we did close back above the 100-day moving average and really just below the 50-day moving average. So we are starting to put that technical picture together, Michelle.
Yeah, I've
as
been
far as
watching that 100-day.
Yeah, right. Now, as far as the hogs are concerned,
Yeah, what do you think there, Ted? The funds are record long, but
yeah.
that thing looked like it rolled over last week after hitting new contract highs.
Yeah, I think the hogs are an interesting case. For one, I mean, we're still in this upward trending channel, although we are flirting with breaking out of it to the downside. We haven't quite done it yet, so they still have a chance to find some footing and potentially turn around and go back up towards or make new highs again. But here's the thing, I think hogs were finding a lot of atypical fund buying, Wall Street investors, things like that, looking for what I'm going to call sort of a recessionary trade, i.e., looking for things that people will spend more money on when we're worried about the economy. And pork, as a cheaper substitute to beef, is one of those things. And so I think you had this sort of recessionary hedge activity happening in hogs, which is why those funds are as long as they are. I think there's some atypical funds that have been in there. But now, after the election and with another cut in rates and all the strength that we've seen in the equities markets, I think we're less worried about that. So I think you have some of that fund money coming out. That might continue, and it might break the chart into a deeper correction.
Okay. Yeah, the question was whether it was a top or a healthy correction. I guess we'll find out.
Yeah.
All right. Thanks so much. Ted Seifried with Zaner Ag Hedge, and that is Markets Now.